Today's conversation is a great one. We have our guest, Stephanie Law from Industrial Bank, a 90-year-old Black-owned bank. If you don't know about it, you'll learn about it during this conversation. She dropped gems. We talked through pre-qualification versus a pre-approval for a loan. We talked about debt to income ratio, what that actually means, and how that impacts your purchasing power. Student loan, millennials, this is for you. You can buy a house. That was the takeaway from it. There's a couple ways to do it, but she gives us so many gems. I am so excited for you all to hear this conversation. I left feeling educated, empowered, and definitely ready to buy more than one home. So tune in. This is going to be a really informative, insightful conversation around obtaining a loan and buying a home.
Hi, Kia. My name is Stephanie Fulton-Lott. I am a mortgage loan originator with Industrial Bank, and very nice to meet you.
So nice to meet you. Thank you for joining. I'm so excited to have a conversation with you today about obtaining loans in this very interesting landscape of homeownership. I am a millennial. I'm 34. I am in New York City, so I'm in a high cost of living area. And the idea of owning a home seems very overwhelming to me. I have all the questions, but I kind of want to get to know you a little more before we dive into the things that I want more clarity on. And I know that my peers do as well. So, you being a loan officer, you're Stephanie. I love that. Can you just tell me a little bit where you're from, how you grew up in terms of your relationship to money? I heard that you sell money. That is the
Yes.
I like
Yes, good
that.
job.
I like money. So if you're selling money, it sounds like we're in the right place. So talk to me just a little bit about what your experience was like growing up with money.
Absolutely. So I guess I can go back to just explain why am I in this space, right? What's my why? So I grew up, I was raised by my grandmother, and I can take a look back, right? Hindsight is 2020. And when I look back as to, okay, Stephanie, what landed you in this space that you are now? Um, my grandmother owned about 5 to 6 homes as I was growing up, right? And that didn't seem like a big thing, but those around me, it was a big thing. Like you live in a big house, and this was just my life. So when they would make comments, it kind of was like, well, yeah, I do live in a big house. Again, I'm raised by my grandmother, and although I saw her have ownership, right, and she spoke to ownership, and she wanted to own properties and sell properties, and like this one was flipping homes back then in the 70s, right? And didn't probably know that she was flipping homes because all she was doing was purchasing a home. She did it the first time. She purchased a home, she sold that home and bought another home on the same block, right? Because that was her path to own other properties. But she never, even though I grew up in the home with her, I've experienced living in several of those homes. She never took the time, and it's not her fault because we only know what we know, right? But she never sat down and said, Stephanie, this is how you purchase a home, right? And she was doing it, but she never took the time to even, I think, explain to her children or her grandchildren how she had done it and why she had done it. It was just something that she was doing.
Wow.
And and
That's
so
pretty
for
unique.
me, and she always speaks to how difficult it was back then because she had to be married and she wanted a home, right? We don't even think about those things. And I'm like, oh, wow. My grandmother, that's not that long ago, had to be married, could not purchase a home as a single woman, a single Black female. So you know what she did, right? She got married because she wanted the
I mean,
house.
she put a ring on it.
she needed a husband, so she got married because she needed. And not to say that that's the only thing that she was looking at, but she speaks to those things. And now I'm like, you know what? We can own homes. As you said, you're a millennial. There's a lot of things that have changed, but there's a lot of things that remain the same as well. And I know I've said a lot just in that short time, but nonetheless, I saw grandma owned a home. I grew up in a home. It was my goal to raise my children in a home. And so in my 20s, I purchased my first home. Um, but it wasn't something that I just woke up one morning and was able to go out and obtain. And I didn't know where to start.
Yes. Okay. This is incredible. You actually have a very unique experience. I wasn't expecting you to say that you had
Oh,
a grandma who owned several homes.
Yes.
Unique as a single Black woman in the 70s. That's really cool. Most of the folks I know grew up in apartments and from the Bronx. So, like,
Right.
right there, we're coming from a very different lens. So,
Mm-hmm.
there's a generational wealth piece, but you identified something that really speaks to, I think, the issue millennials are experiencing, and it's the absence of financial literacy, right? Your
Yes.
grandmother didn't
Education.
tell you, right? Like, how
Education.
education piece is so important. And so I'm very curious to learn, how did you find the way to actually buy your first home in your 20s if you weren't taught, if you weren't explained the ins and outs of
Yes.
buying a home?
Kia, I don't like no. I don't like to hear no. And so, and I think, when we look at millennials, and a lot of my client base and my customers are millennials, all of a sudden you guys are surfacing, right? You didn't want to have ownership, and now all of a sudden you do. It is like, okay, um, I'm being told no. Why am I being told no? So you guys live in an era where everything is right in front of you. You have the social media era. Everything looks great. Everything looks perfect. Everyone already has, right?
This
But
is
how do you
fact.
get there? How do you get there? So I'm a person that if you tell me no, I don't hear no, I hear not right now.
Love that. Love that.
So why is it no today? Right? Why is it not right now? So I took it upon myself because again, my grandmother, even though she had done it, she wasn't relaying the knowledge, the education, the information to me. She may not have even gathered that herself, right? She was just go.
Doing.
So these are the things that I'm looking at. What are we lacking? Why are we still at the same rate of ownership 60 years later as a community? Because we lack education. So I would go and apply for a loan and they would tell me no, but they wouldn't explain why no. So now I'm looking for the answer to why not right now. And as
And
I
this is in
continue
your 20s, right? Just for,
in my
so
20s,
this is in your 20s, you're trying to get a loan and you're being told no. And can I just ask to set it up, did you have a full-time job? Because in our 20s, most folks are like maybe in that entry level new grad opportunity, or maybe not even in their full-time role,
mhm,
trying to make ends meet. So did you have a full-time job? Did you have money set aside, a specific down payment, 3%, 5%? Like, just kind of tell me
right.
that landscape look like for you when you were hearing those no's?
In the beginning, I knew nothing. I did have a full-time job. I actually was working in corporate for Johnson and Johnson back then, but that's only one piece of the puzzle, right? So I'm like, well, I do have a job, but again, the education wasn't there. So when I had gone off to school, what do? They sit literally back then. I don't know if they do it now, but they sit in the cafeteria and it's like all these credit card offers, right? Now you guys have social media, so I'm sure it's popping up for you in advertisements. Hey, you can get this credit card. You're 18 or whatever the age is. So, what did I do? I am new to, stepping out of my grandmother's home and on the college campus. And it's like, hey, there's money here. We have money for you. And we think it's free money. So of course I'm racking up those credit cards. And so now when I'm one of the pieces of the puzzle, when I'm looking to go purchase a home, guess what? My credit. No one ever told me how to access and manage credit, right? And to use credit properly. So that was one of the hurdles, right?
Okay. The credit score was taking a hit because you were racking up a lot of debt. And so I'm sure
Yes.
we'll talk even about debt to income ratio, because there was,
Yes.
you were earning from your job and the debt that you were accruing from credit cards and possibly
Yes.
student loans, but we'll call it credit cards right now. Okay, gotcha. So that's sort of the landscape. So you got these credit cards because you're
Right.
like, cool, sounds like free money. I'm with it. I'm working
Yes.
a job. I like to own a house because I come from a lineage where my grandmother, my family, they owned homes.
So although my grandmother owned a home, when it was my time, or owned several homes, when it was when I had this, everyone went to Big Mama's house, right? Everyone went to Grandma's house. So why do you need a house when Grandma has a house,
Yes,
right?
yes, I
Um,
relate so much.
so so when you say everyone else lived in apartments, like my friends and my other family members lived in apartments. She had a home and a house, so we just gathered there. But again, now I have children, right? At the time I had two, and I'm like, well, I feel like I need to be in a house. And it was like no one around me. They're like, why do you want a house? And I'm like, well, I want a house. I would buy magazines, and because social media wasn't a thing. So I would buy magazines and I would look at homes, all the home buying magazines from the grocery store. And I would spend so much time flipping through those magazines and looking at the houses that I wanted. On the weekend, what was fun for me was to go and look at houses, right?
Yeah.
So I don't know why, but I always aspired to own a home. I've even had an aunt say to me, "You're too young to own a home." Is that even really a thing? Like, how am
Hey,
I too young to own a home? But again, the knowledge and the education is not there. So we give information to others and not really realize, what we're actually saying to those individuals. So again, um, when I look back on my own experiences, right, with homeownership, my own upbringing, um, I really want to bring what I think we're missing is the education, give you the knowledge so that you can take that knowledge and that information and you can decide what to do with it and what works best for you.
how did you get that education when you bought your first home? Because you were hearing the no. So what changed? What
The change was me dissecting why am I getting the no again? Let's go back to that. So I was dissecting, okay, you told me that credit was an issue. Okay, you told me that I didn't make enough money. That was an issue. Okay, you told me that I didn't have a long enough credit history at one point. That was an issue. So when I was hearing all these things, I was researching, going into the library, like, okay, what does it take to own a home? What are the things that they're going to look at? Okay, I need to work on credit. Let me work on credit. Now credit's important. I didn't know when I was getting those credit cards and those credit card bills that was going to even be something that I had to even think about,
got it, got it.
So as I had further conversations and asked questions and gathered the knowledge, right? Um, I then developed a roadmap that got me to owning my first home.
Wow. So you were able to say, I know I need to increase my credit score and I'll take,
Yes.
these steps to get my credit in good health. And
Hmm.
I know that I earn this amount of income. Now, was your income a factor? Were they asking for a certain salary that you needed to make?
Back then, I had no concept of debt to income either, right? And no one took the time to even explain that to me that we're looking at a debt to income. It's a certain number that we're looking at, right? Your debt to income ratio. They didn't explain that. They just said, okay, you don't make enough money, right? But what does that mean? So again, further research to find out what that meant. And I think sometimes we get caught up in, okay, you can afford this amount of home, but we all want the $1 million home, right?
Of course.
We all want that.
We're flashy, right? We want the 5 bedroom, 5 bath, like give me it all.
However, we have to pay to live somewhere, right? So, with that being said, if you're going to pay to live somewhere, why don't you get your foot in the door to owning a home? If it's an apartment, look at a condo. The answer needs to be how much can I afford, right?
When someone's coming to a loan officer like you, right? And
Hmm.
going to tie into your experience. And they're like, I make $80,000 a year and I want this $300,000 home. And you talk
Right.
about debt to income ratio. Can you just break it
Yes.
down for me? Like, if I'm like, what does that mean? Like,
I think again, we we're in a microwave society, right? We see everyone on social media, they already have, but we don't see what it takes them to get to what they have now. So I think it's very important for us to educate ourselves. It's very important for us to get with individuals that will take the time to explain because it's not one glove fits all either. So you may make $80,000 a year and be able to afford a $300,000 property, right? Because there's pieces that are missing to that puzzle, and it takes you to work with an expert that can explain your specific situation to you. But the next person that's also making $80,000 a year may not be able to purchase a $300,000 home. You know why? Because they may have more debt. Maybe they're driving a brand new car. Maybe they have student loans. Maybe they didn't put down a large enough down payment, right? So these conversations are important. So it's important to have this conversation, but then also to take away from this conversation to get with a professional to have a more individualized conversation and a specific roadmap as it applies to you.
That's
Does that make sense?
Yep. So if I was meeting with you as a loan officer,
Yes.
how would you guide me? Like, give me just some illustrations to what it looks like to work with a loan officer for any person who's clueless on why you would be a part of the equation.
So anyone that sits with me, first of all, I want you to understand your purchase power, right? So what I typically do is I take a look at your specific goals. Kia, what is it that you'd like to do? What do you want homeownership to mean to you? Do you want to just purchase a home for it to be your forever home, right? Are you purchasing as a roadmap to investing, right?
Nice.
Let's take a look at those things, and then now we can start to get you a specific uh process, right?
Okay.
So initially you're going to sit down with me. I'm going to have a conversation with you and ask you what are you wanting to achieve, right? And then I'm going to take, and any loan officer will take a look at your three basic things we start off with, right? Your credit, your income, and your assets.
Credit, income, assets. I know what credit is.
Yes.
That's our credit score. Income,
Yes.
that's my salary or anything I'm making, whether it's entrepreneurial in addition to my salary. And my assets. Can you explain what our assets are?
So back in the day when my grandmother was purchasing a home, they had to put down 20%, right? That
Yes,
was
that's
that was
20%.
you had to have that money saved. There was no workaround. You had to put down 20%. Since then we have some government backed programs, FHA. FHA is a great loan. FHA came out and said, hey, we want to make homeownership more affordable. And so they allowed you to put down 3.5%. So
Yes.
that opened up a door for a lot of individuals and made homeownership more affordable because they only had to save 3.5% as opposed to 20% to put down.
That's an FH loan. Is that the Federal Housing Authority? They offer a loan and
Ye-
you can get the loan at a 3% interest rate. Or is it not a 3% interest rate? Rather, you can put down 3% on the house versus a 20.
3% of whatever the purchase price is, 3.5% is what the FHA loan allows for.
Okay, awesome. So
Now,
that's a government
it's
funded,
a government backed loan,
government backed
right?
loan, FHA.
Yes.
So everyone make a note of
Yes.
that. If you don't have
Yes.
20%, you can have an opportunity by putting down 3.5% through the FHA loan. Okay,
Through
great.
an FHA loan, absolutely. And then also, a lot of folks don't know is that conventional loans, they now have, wanted to be more competitive with the FHA loans. And if you are in a specific credit position, you may actually qualify to put now not just the 20% down, but you can go as low as 3% depending on your specific circumstances. So conventional loans now allow for 3%, 10%, 15%, and then the 20% down as well. And you can actually put down, whatever you're comfortable with putting down as well. If you have extra money saved and you want to put more down, it's really, the choice is yours. It's your option.
And how
But
does that connect
if you
to our assets again if we're looking at what we're putting down?
So we take a look at, how much money do you currently have? Have you been saving? Have you not been saving? Do you have access to retirement funds? What do you have at your disposal? There are some down payment assistance programs that, are out there from the county, the state level, and some local organizations have down payment assistance programs.
Okay, so this is super helpful. Now we know what we need as a first time home buyer. You need to look at your credit, your income, your assets. What would you say millennials are facing as barriers right now? Is it the down payment piece, just not having the liquid because there's student loan debt? They just haven't earned enough in order to save. They live in high cost of living. Is it the credit score, or is it all three? Is it credit, income, assets? Like, what are you noticing as some of the barriers that millennials in particular are coming up against?
I would say that it is all three. I do see all three, but the biggest thing, and you're going to hear me beat this to death, is education. Because just because you have one of these issues does not mean that if I give you the information, you can't resolve or figure out maybe this is not your roadmap, but you have another roadmap, right? Sometimes there's a fork in the road, and you may not be able to go to the left, but you might be able to go to the right, and get the same goal accomplished. So it's really just, hey, let's take a look at where you are. You may have the income, right? But like we discussed, you may have a large amount of debt, right? So maybe you don't qualify based on debt. Are there some things that we can do? Can we have a conversation to get you in the mindset of, hey, maybe I need to pay down some of this debt, or maybe, I need to take a look. You're a millennial, right? You guys are in a very sweet space right now. Some of you have graduated. Some of you are looking to increase your income. Maybe that may be something that you may be already planning to do within the next few months, right? Or maybe a year from now. So I think it's very important to get a roadmap as to what your specific situation is, and let's go from there, you know? So
Would, sorry, go ahead.
these are all things that should not be a block or an obstacle that you see that prevents you from home ownership, right? Just look at what your situation is. Hey, if I don't make enough income for the $300,000 house, maybe I make enough to purchase a multi-unit, right? Because with multi-units, what happens is I can qualify you based on, if you do need a supplement to your income, I can qualify you based on the potential rental income in a multi-unit property.
Wow, that's
So
interesting.
there are options. It may not be what you came and sat down and said, Stephanie, I want this $300,000 house. I love it. This is what I want to purchase today. And I may have to say, Kia, you may not be able to purchase that house today, but let's take a look at this. Are you willing to adjust for today so that you can get to your goal in the future?
That's really helpful. So there's more than one way to approach buying a home.
Yes.
We shouldn't be bogged down by the no. We should be
Yes.
talking to a
Never.
professional like you. And I'm really curious, at what point do we come and talk to a loan officer? I know you find a realtor, maybe you go on Zillow, but like, what are the steps that one takes before they're actually sitting with someone like you and receiving the advice and the education?
I'm so happy you asked that question, Kia, because this is a pain point in our profession. Everyone falls in love with the home. No one wants to have a conversation about the financing of that home, right? You want the home, you don't want to pay for the home. So it's almost always, and it's shifting just a little bit. Everyone goes to the realtor, or they meet with the realtor first, which that's fine. However, the appropriate first step would be to meet with a financial professional to know, okay, how much home can I actually afford? Right? That's the very first step. You should be sitting down with the loan originator. Not to say that you can't sit with the realtor. Most folks do. That's fine. They're just going to redirect you to a loan originator because they want to know, rather than me running you around to 100 homes that you can't afford, let's take a step back. Let me connect you with the loan originator, and let's see how much home you can actually afford, and can you afford a home today? Do you qualify today? So they're going to want to see you get pre-approved. Is the first step that they're going to tell you to do.
Okay, so pre-approval really should happen, and we sit with someone like yourself to ensure that we're actually eligible and
Yes.
qualified to go look at the homes that we're desiring. So I hope for everyone who's curious about where to start, it's not
Mm-hmm.
just slow, it's not just your realtor, like find out what your
Mm-hmm.
power is, what your purchase power is, and feel
Yes.
confident around that. So that way you're not looking at $1 million homes that you probably may or may not be able to afford.
You may not be able to, and you have to look at a pre-approval as your golden ticket. A pre-qualification, that's your golden ticket to get you in the door to even, go and see some of these homes. Sellers are getting a lot more savvy. They don't even want you to go and see their home on a showing unless you have a pre-approval in hand.
Wow. So
And
we have to bring
not
it with us, like an
you
actual
have to
pre-approved.
you have to show your realtor the pre-approval and let them know that you can in fact qualify for this property, or a pre-qualification letter. And not all pre-qualification letters or pre-approvals are equal.
Ooh,
I'll say that as well. That's important to know. Um, And the difference, I guess we can go into the difference. Is that okay between a
Yeah.
pre-approval and a pre-qualification? Do you
Yes,
know?
please.
Okay, so a pre-qualification is simply the conversation that we're having now. Kia, how much do you make? You can say, Stephanie, I make $1 million, right?
Love to. Yes.
Okay. You make $1 million. I don't get to see, on paper what your credit looks like. You can tell me, hey, I have a perfect credit score. I have an 800 credit score. And I'm going to say, oh, Kia, yes, go and see the $1 million property. I'm going to draft you up a letter and I'm going to pre-qualify you.
Right.
Only issue with that is now you've put in an offer on a property, and now we're taking a look at your at you as a whole, how you look on paper, and we realize, hey, you may not actually make $1 million, right? Or maybe you do make $1 million, but you have a business, right? Your business made $1 million doesn't necessarily mean that you account for making $1 million, because now you've done your taxes, and when you've done your taxes, you said, hey, I don't want to tell Uncle Sam I made $1 million, right? Because you took some notes
Right.
from Donald Trump. And so you've done all these write-offs, and we find out you only make, let's say, $20,000 on paper. So then you don't qualify, for that actual property. But I've given you a pre-qual letter based on our conversation, your verbal confirmation as to what you qualify for,
Wow.
right?
So we
So
can have a conversation, get pre-qualification, but it's not a pre-approval. And that can essentially be rescinded if we go through the proper channels and identify you actually are not qualified and you will no longer be eligible for that pre-approval.
correct, because you have to on paper. Let's take a look at some of your income documents, right? Let's see how you filed your taxes. Let's look at your pay stubs. You may have deductions coming out of your pay stubs that, yes, you may make, $80,000, but you have deductions coming out. Maybe you have a garnishment coming out of your paycheck. It's important for us to take a look and see those things. So a pre-approval is a lot more in depth, and we verified your income, we verified your assets, and now we've given you that pre-approval.
Okay, so this is super helpful. Pre-qualification, pre-approval, and how long does the pre-approval last? When you are looking for homes and you have a pre-approval, are you good for a year with that pre-approval, or is it 6 months, or is it indefinite?
Considering nothing in your circumstances have changed, you haven't changed your job, you haven't lost your job, your income remains the same, your credit, you haven't made a huge purchase since we've done the pre-qualification or even the pre-approval. Considering nothing has changed, each one should last about at least 90 days, 90 to 120 days. And sometimes, depending on your lender, they may want to, have updated documents and revisit that pre-approval. So actually 120 days, I apologize. 120 days, your pre-approval should last, because your credit will last that long. But again, let's be mindful that if anything has changed, like, this is why we tell all of our clients, okay, we've given you the pre-qualification or pre-approval. Don't go out and make a huge purchase. Like, I've had clients that still buy a car after I said don't do it, because they figure, oh, I'm pre-approved. No, you haven't even really started the process yet. So it's very important to be mindful that if anything you've changed since we've taken a look at all of your documents, that can definitely affect your you
So hold
qualifying.
off on major purchases. Pre-approval does
Yes.
not mean you're suspended in the air. You still need to
Right.
move very cautiously and be
Mhm.
mindful of any credit hits. Now, when you do get a pre-approval, are you getting a hard credit check? Because I know that one of the reasons you said don't make a big purchase is that that's usually a hard credit check if you go ahead and buy a car or anything that's going to be something different from a soft inquiry. When you're applying for pre-approval, are you doing a hard credit check?
We can do, and some folks will do, just because I think it makes clients feel a little bit better, because everyone's so, it's like taboo. Oh, please don't pull my credit. You're gonna make my credit go down. But this is the thing, like, if you're serious about making your purchase, it's very important that we have all of the details, right? So it's very important that we're able to take a look at your credit. So as long as you're not doing, like, let's say today you're going to try to apply for a home loan, and then tomorrow you're going to apply for a car loan, and then the next day you're applying for several credit cards. As long as you are very mindful as to what you're doing with your credit, I would say don't be so afraid about getting your credit pulled. It's not like going to the car dealership and they're going to run you through to every single bank and see which one, can just, get you approved. That's not the same. When you're looking to purchase a home and you're going to get pre-approved, it's very important that we see everything up front. So you need to equip us with the tools to help you, right? I need to see what you have on credit. That way, how can I help you if I can't see exactly what you have on credit? So I would say don't be afraid. If your intent is to purchase a home, you need to be able to give your lender the tools to best help you.
This is so helpful. And thank you for breaking that down. I realized that in our whole conversation, Stephanie, you just gave education. And that's what we started at, right? Like it is possible to buy a home, and everyone's going to have a unique situation, whether it's student loan, whether it's poor credit, whether it's a salary that's lower than what they want it to be. But it sounds like there's opportunity for every situation if we're educated. And that's one of the benefits of working with someone like yourself. And what I loved about what you shared is that you came from a space where home ownership was normalized. So there was this natural desire to say, oh, of course I want to own a home. And you were able to do the investigative work very early in life and obtain the education that now it's second nature. Like all of the information you gave me, that just sort of rolled off of you because it really is a part of who you are. And I think for myself and my peers, that's a place that we want to be. We want to feel empowered to make strong financial decisions because we're educated, and having a safe place to ask conversations like we did today. What's pre-qualification? What's pre-approval? What credit, assets, resources, income, like all of that. We need spaces to talk through this and break it down because it really demystifies everything that we know around buying a home that feels impossible. So I really appreciate just like the wealth of knowledge that you provided. I do have a personal question because my husband and I definitely want to buy a home sooner than later. We have two little ones, and I am pretty financially savvy in the sense that I've paid down a lot of debt. I have a decent income. We have a combined income, but I have student loan debt about 45 grand. And I'm just curious, one, if you can remind me, what does debt to income ratio mean again? Just break it down so I get it. And secondly, how does my student loan debt impact my purchase power, especially for someone who doesn't have a ton of credit card debt and all the things, but I do have about 45K.
Debt to income ratio, yes, your student loans are considered in your debt to income ratio because when I look at your credit, I'm going to see anything that I can see on credit is what I'm going to utilize in that calculation, your debt to your income. And it's just simple. It is the money that you have coming in, right? How much money do you make? How much money do you gross, right? Your gross income, as opposed to those debts that you have coming out, which is anything that we can see on credit or anything that you make us aware. Well, not anything that you make us aware of, but the things that are coming up on credit. What's on your credit? Do you have credit card payments? Do you have a car payment monthly that you're paying? Along with the housing or the projected housing payment, right? So we take a look, depending on which loan product we're placing you in. It's either we're going to be looking for you to be under 45% if we want you to be placed in a conventional loan product, or some of the other government-backed loan products that we spoke about earlier, we can go up to about 50%. So we want to make sure that the money that you have coming in, as opposed to all of the debt, along with the housing payment, is 50% or below.
50% or below the money that I have coming in. So I have, if I make 100 grand a year, right? And I don't know, like X amount is going to my debt. Like I have 45,000 in debt. So am like, what would that look like? Would someone be kind of, really close to what's allowable?
So this is the thing with 45, and this is the thing with 45,000 in debt, we really have to take a look at your credit profile, right? And your liabilities, all of your liabilities, and what your monthly liabilities are. So if you may have $45,000 in student loans, if you came to me and said I have $45,000 in student loans, what we first do is we're able to take 1%. If we don't see a payment, because a lot of folks, again, in student loans, you may not necessarily be making a payment yet. I don't know if you are or you're not. Sometimes you're not making a payment because they have like forbearances. You don't
Right.
have to pay until you're out of school for 6 months, and you may have applied for, for it to be deferred. So there may not be a payment showing up on credit, but if I do see that it is a student loan that's on your credit, I have to account because I know the mortgage is for 30 years, right? You may not be making a payment right now, but somewhere in that period of time, that payment's going to come due. So I want to make sure that the purchase that you're making with the home loan, you're going to be able to pay even when you have to start paying that student loan.
Gotcha.
So I have to consider it. So if it's showing up zero payment, monthly payment on credit, I'm going to take at least 1% of whatever that $45,000 is and say, okay, you know what, Kia, I'm going to add this 1% of that $45,000 to your monthly payment and
Okay.
consider it in your debt to income ratio. Does that make sense?
It does. And it actually sounds a lot less scary than you looking
Yes.
at just 45,000 and assuming that's all my debt. So
Correct.
understanding how it's broken down makes a huge impact in knowing what that debt to income ratio might look like from the lens of a loan officer or a mortgage company. Okay.
Absolutely. And then we can take it a step further. For some of my clients, I notice if they do have an actual payment. So right now there's an income driven payment, right?
Yep.
That
Familiar with that. Yep. That's
you
based on
familiar with that?
your earning.
Yes. So the income driven payment may be less than what I'm actually seeing or what I'm accounting for with the 1%. So I will urge you to reach back out to your servicer, your student loan servicer, and get their projected payment. If you have no payment, I want them to give you a projected payment, what your income driven payment would look like once the payment is due, and let me use that in the calculation if it's less than the 1%.
Gotcha. Okay.
Sometimes
So
it
if
might
it's like $200 a month, you're going to factor that in to
yeah,
what I can afford. If it's 500, if it's 140, if it's 45, whatever it is, you're going to figure out what that payment might be, a projected payment is, and factor
yes,
that into what I'd be available to pay or eligible or qualified to pay when paying
absolutely.
the mortgage. Okay. And
Absolutely, because we do know, and we don't want to burden, and it's for your benefit because we don't want to burden you with a payment that you may not be able to afford because there's another debt that you're going to be obligated to monthly once you're in the loan, right?
right.
So,
Okay, so it sounds like it's possible. Like it is factored in, but it
right,
doesn't mean that you're out for the count. So for
not
everyone
at
with a
all.
student loan, don't feel held back that you can't buy a home. It is possible, but understanding what you're working with and talking to someone like Stephanie would probably be
Right.
the best place to start to really understand what your purchase power is, what your debt to income ratio really looks like, and how that impacts you getting the loan that you need in order to buy the home that you desire. So that was
Absolutely.
helpful. Thank you for breaking that down. Stephanie, I have one more question, and I think it's a hot
Okay.
because, folks are getting married now in my generation or my
Mhm.
era, my millennial era, everyone's having kids, but not everybody is at the same level. So I know people who their husband has great credit and is a high income earner and their credit may be fair and they're not
Mhm.
at the income level they want to be. How does that look? Like, what is the approach when you're trying to buy a house, but one person has poor or fair credit and
Mhm.
moderate income, and the other person has an almost 800 credit score and, a nice six-figure salary? Like, should they buy it together? Should they buy it separately? Like, what would be the approach?
So there was a time when whoever had the higher credit, we'd go off of the higher credit. So there would be a benefit in attaching someone that had higher credit, but maybe not as much income to the loan file and have both of you qualify. However, now we've gotten a little bit more savvy and we realize that that's what folks were doing. Like, hey, my grandmother has perfect credit. Let me throw her on the loan and we can go off of her credit. So today we're going to take a look at who. First of all, we're going to take a look at all three of your credit scores. Let's say that now, right? We're going to take a look at all three of your credit scores, and from that, we're going to choose your middle score,
When
which
you
is
say
not the
all
highest score you
three,
have.
do you mean Equifax and
Equifax,
Experian?
TransUnion, and Experian. Yes, all three, and we're going to pull a true FICO, right? Because there's more than one FICO score as well. So when we take a look at all three of those credit bureaus, we're not going to take the highest credit score. We're not going to take the lowest. We're going to take whichever score falls in the middle. So, with that being said, if you have a spouse or if you have another individual that's going to go on the loan file with you, we're going to take a look at all six scores, right? We're going to look at both middle scores, and whichever the lowest middle score is, whether it's yourself or your spouse, yourself or your cousin, yourself or your grandmother, we're going to use the person. It's like the weakest link, right?
Oh, God,
That's the score that we're going to utilize. Unfortunately, that's the way it is now.
that's
So
tough. So it sounds like it might be to someone's benefit if they can swing it and they have the better credit score to buy as an individual. The downside is that your purchase power is decreased because you don't have that dual income backing you. Is that how you would phrase it?
absolutely, and it may be, but again, it's very important to understand that, okay, yes, that person may also have income. If you can qualify your own, that's great because they can also always go on the deed as well. So there's things that you can do that way if you just want them on and they won't be on the loan for now. But the other thing is very important to understand that just because that individual has income, right, we're also going to associate their debt as well.
Oof. Oh,
So
now
you
we're
may want to qualify based on their income, but understand you both have student loans. That person may have, student loans as well. So that's going to be considered as well. So it's really important just to take a look at the numbers and what the numbers look like on paper. What is it? Jay-Z said numbers don't lie, right?
right, right. They
So,
absolutely don't. They're pretty black
so
and white.
So you may be looking at it as, hey, we both have this, both six-figure income, right? And I want this person to go on the loan with me, but then when we place that person on the loan, we have to understand that their debt is going to also hold weight in that qualifying as well. So it may not make sense. It's very important to take a look and see, hey, just because they make a six-figure income may not mean that they're giving you more purchase power either.
Okay, so
So we
that's
have that
really
misconception as
helpful.
well.
Gotcha.
Yes.
So you got to take a holistic look at what's going to work. And I'll ask
Yes.
one more really quick question. If you are a married couple and let's say you have a lot of money saved, but one person has better credit, is it
Mhm.
helpful to show that that one person who is going for the loan has a significant amount in the bank? Like, let's say you both combine your capital that you have and you put it in one bank account, and that
So
person who's
I
applying.
wouldn't I wouldn't suggest if you don't already have the funds in one bank account, I wouldn't suggest that you do that now because when I take a look at your loan file, I'm going to look if as you as an individual, if you have money saved, I'm going to want to see 60 days worth of your bank statements. Wanting to know,
Wow.
have you had this money in the account? Is it sourced and is it seasoned? Where did it come from? I can't see that you had a large deposit within the 60 days because I'm going to want to know where that money come from. And you can't tell me that your grandmother had that money underneath the mattress and she dumped it into your bank account. That's not going to work. But we do allow for gifts. You can receive a gift. So if it's someone that's going to give you a gift, I would suggest don't move the money right away. I would suggest again you get guidance. I would say because I only need to see 30 days worth of their bank account if they're going to gift you the funds, right? And you have to document that. You have to show me that the money was in their account for 30 days and then they gave you the funds to put into your account and I have to see the full transaction.
Wow.
So
Okay,
so it's
so
very
for the
important. Don't
consumers
just
out
go
there,
moving money around, right? Because there, and I hate to say it because there's folks that are not doing necessarily the right things, right? So although I love all of my clients and I want to help them, I'm not willing to share a jail cell with them, right? So to speak, and I don't want any of them to go to jail because they've been moving funds around. So it's just very important to be mindful of how you're managing money. If you're going to receive a gift, the gift has to present the full gift. And so we're going to want to see that person's account that the money came out of for 30 days. We're going to want to see the transfer over into your account. And you're going to have to show those statements and also the check if they didn't do, just a transfer into your account. You're going to have to show that being documented the proper way because the underwriter is going to want to see that this transaction did in fact occur. Not that you handed them grandma's mattress money and then they handed it back to you.
right,
Okay.
right. Okay, this is actually very helpful because I'm sure there are people who might have a lot of cash around or do, business
Yes.
that just is involved with a lot of cash and it's like, okay, I got the money. What does that look like? But there sounds like there's some red tape. So we want to make sure we're doing everything the right way so we're not being impacted by unexpected barriers. And as we've been talking about, it all goes back to education, which is
Yes.
like you is so great. So thank you so
Yes.
much. for
You're
answering those
welcome.
questions. We love to ask 5 rapid fire questions at the end of every conversation. These are fun. You don't have to think too hard into them. You can give me one word. You can say pass, but I hope you don't say pass. So the first
Okay.
is splurge that you'll never regret.
Splurge that I'll never regret. Again, I'm going to be pretty consistent. I'm going to say purchasing my first home.
Love that. Okay. How do you celebrate a big financial win?
I celebrate a financial win. I think it used to be, it has changed, right? It used to be with the big purchase, like find me in one of the designer stores, right? And now it's just like I'm more comfortable with seeing the money in the bank and I don't want to spend it. So celebrating for me is taking a look and figuring out what I can do that's not spending more. You know, what can I do that is going to again add to my assets and and just take a moment to just congratulate myself, just I call it a personal just listen, take a moment to give you yourself the hey Steph, you did a good job, you did well.
I
it
love
does
it.
it's not attached any longer to I have to go make a big purchase and treat myself. Sometimes it is, right? But not, it doesn't have to be always anymore. Like I don't need that. It's more gratifying to me just to know that I had the win and take a moment and sit in it and acknowledge it to myself.
I love that. Cash or credit card?
It depends. It depends on what the purchase is, right? Cash is king. You'll hear that a lot. However, depending on what my personal goals are, my financial goals are, you need to show that you're utilizing credit and you're utilizing credit properly. So I prefer to use both, if that makes sense, right? I'll put it on credit. And before that 30 days hits, when I'm going to be paying interest, I'm going
Yes.
to pay it off with the cash. So
So
I think,
minimum balance or statement balance? It sounded like statement balance to me, but
yes. Yes.
okay. And last one is self-care splurge. Is it a spa day or a staycation?
I love to go to the spa because some days I just feel it necessary just to step out and just get a massage and just be in a different environment. So for me, it's the spa, but I don't mind a staycation either.
I
Yeah.
love it. I love the spa too. I got a massage early this week. It felt amazing. So I am with you on that. Stephanie, you were wonderful. Thank you so much
Thank
for sharing
you.
your wealth of knowledge. You definitely broke it down in a way that feels like it is possible. And I feel empowered. I feel
Right.
ready to do more deep dive in like the education piece. I hope that our listeners also feel empowered. Where can people find you? How can we connect with you? How can we learn more from you? Just give us all your plugs.
So you definitely can find me at industrialbank.com. And you can just go on and see if you're working with, you'll see my profile there on our banking website. I want to take a moment to just speak to industrial, if that's okay, Kia.
Of
So we
course.
are, and I'm really excited. Anyone that will listen, I like to speak on industrial bank. We are a Black owned, third generation of ownership. The current president is one of the original founders' grandson. And we are 90 years young. We just made 90 years young back in August of this year. So I'm really excited to be a part of this Black owned bank. So I just want to say that really quickly. So if you check out our website, we are a full service financial institution. So definitely we have ATMs here in the area. We have a branch in Harlem. We have 2 branches in New Jersey, and we have several branches throughout the DMV. So I'm excited to mention that. You can also find me on Instagram at Steph's Movement _ and also I my email, should I say that, is S Fulton-Lott LOTT at industrial-bank.com, and I'm available to answer any question. As we mentioned, education is, I may have not necessarily gotten my education for free, but I have it and I can give it for free. So if there's any question, no big, not too big or too small, please ask the questions. I want to bridge this gap of homeownership for folks that look like myself and my family. So please ask away.
Thank
Thank you,
you so
Kia.
much, Steph. We'll link all of your information in the show notes. You are
Perfect.
incredible. Thank you for being a resource. Y'all don't go too hard on my girl now, asking her too many questions, But no, we'll make sure that we bridge the gap. Thank you again for having this conversation with us. It was wonderful. As we say at Guapify, we're here to help people who look like me and you level up our money game. So we appreciate you for today. Thank you, Steph.